bleak retail earnings just ahead of Black Friday. Shares of Gap and Nordstrom got pummeled at the market open Wednesday after the retailers reported weak earnings due to supply chain issues. Factory closures in Vietnam led to shipping delays at Gap. That jacked up costs because it had to spend nearly $500 million to air freight goods to meet strong demand for items such as its Yeezy hoodies and Old Navy apparel. The clothing retailer cut its estimates for annual profit, and investors drove its shares down over 20% in early trading Wednesday. Over at Nordstrom, the department store chain's quarterly profit fell well short of analysts' targets. Sales at its off-price stores, Nordstrom Rack, dropped 8% from 2019 levels as it suffered from severe shortages of women's apparel and shoes. The company was also hit by labor shortages in the U.S. that have forced retailers to boost wages and dish out bonuses, raising costs. It's offering up to $650 in incentive pay to new store employees as it seeks to hire 28,000 workers for the holiday season. No holly for Nordstrom shareholders, whose shares have vastly underperformed the broader markets with a measly 2% gain this year. They nosedived 29% in early trading Wednesday.
Wall Street action was muted Wednesday ahead of the Thanksgiving holiday and a shortened session when investors returned on Friday. The Dow slipped 9 points, the S&P 500 rose 10, the Nasdaq rallied 70. Economic data gave investors much to think about over the holidays. Consumer spending rose more than expected in October, and inflation remained on an upswing. The so-called core PCE, a measure of inflation favored by the Federal Reserve, showed a 12-month surge through October of 4.1%. In separate data, the number of Americans who filed for new jobless assistance plunged to lows not seen since 1969. Investors also received some insight into Fed thinking. Minutes from the November meeting showed some policymakers may be open to accelerating the Fed's plan to stop buying bonds to support the economy. Ed Cofrancesco, CEO of International Assets Advisory, thinks investors should tweak their portfolios with a less accommodative or, quote, hawkish Fed in mind.
We think we're going to have inflation through 23. So while we still think that equity markets will remain at or near all-time highs for the next few months, at some point, as the Fed takes a more hawkish approach, and clearly that's what they're indicating in today's minutes, that the jet fuel is going to be taken out, this rocket fuel is going to be taken away from the markets, so that retail investors need to start exercising defensive strategies.
John Deere was a standout on the corporate front. The world's largest farm equipment maker hardly missed a beat during a more than month-long strike. The company posted its highest ever profit and guided full-year estimates higher. The stock touched its highest price in at least 9 months. It was a much different story for Gap Inc. The apparel retailer lowered its full-year forecast as it gets whacked by supply shortages. Shares of the Gap lost nearly 1/4 of their value. Nordstrom was another big loser. The high-end department store chain warned that supply shortages and staffing problems will weigh on business during the crucial holiday shopping season. The stock crumbled 29%.
The ripple effect of global supply chain issues has not only hit U.S. ports, but the country's roads as well. Gustavo Carrion Valero has been a truck driver for more than 30 years, mostly servicing New York's JFK Airport, and said heading into the holidays he often works round the clock due to the pressures of the job.
So right now I start at 4 in the morning to finish my shift sometime 1, 2, 3 in the morning.
The president of H&R Freight, Michael Triolo, where Carrion Valero works, said truck drivers sometimes wait 20 hours at JFK just to load one shipment.
Drivers are getting frustrated with staff at the airlines, frustrated with each other in the parking lot. There's been altercations back and forth with lack of structure to pick up the cargo in the airport.
That's a big problem given that trucks move about 70% of all the freight on the ground, says Stephen Flynn, head of the Global Resilience Institute at Northwestern University.
The folks who are on the ground are doing all they can essentially to work around a system that's basically in complete constipation.
Liz Picarazzi, founder of custom trash container company CityBin, said between sourcing raw materials like bamboo and aluminum and shipping, her product is part of about 15 different supply chain lines.
So the shipment that we just received was on a very long journey. It was about 7 months, when normally it would be about 10 to 12 weeks.
Her husband, Frank, the company's COO, said it's impossible to run a, quote, lean business due to the unpredictable nature of the health crisis.
A shutdown in a hub in China means months of delays over here. So you can't really be agile anymore or nimble. You have to overbuy inventory. So when you eventually receive it, you've got 6 months of supply. So you can basically remain in business.
Despite companies like UPS and FedEx pledging to work 24/7 to ease the glut, supply chain problems are expected to last into 2022.
The number of Americans filing new claims for unemployment benefits dropped to the lowest level since humans first walked on the moon.
The Eagle has landed.
The data from the U.S. Department of Labor out Wednesday showed the number seeking benefits dropped to levels not seen since 1969. And the weekly number, just 199,000, points to sustained growth in the U.S. economy after a year marked by shortages and an unending health crisis. Employment growth has been fitful but strong, averaging 582,000 jobs per month this year. But the workforce is down 3 million people from its pre-pandemic level, and it seems that many Americans are opting to remain idle, even as unemployment benefits expire, schools reopen, and companies raise wages. The plunge reported Wednesday was exaggerated by the modeling the government uses to strip out some seasonal fluctuations with the data. But the recovery is gaining momentum, and the number of Americans receiving continuing unemployment benefits is at the lowest level since the start of the health crisis in March of 2020. Jobless data was released Wednesday this week because of the Thanksgiving holiday.
In what could be another positive sign as the key end-of-year holiday shopping season begins, government data released Wednesday showed U.S. consumers kept on spending despite rising inflation. Consumer spending rose more than expected in October, with shoppers showing little sign of struggling with high prices. Inflation pressures heated up anew in October. The Personal Consumption and Expenditures Price Index, or PCE, rose 5% over the past 12 months. The core PCE, which excludes food and energy, and is the Federal Reserve's favorite inflation gauge, accelerated 4.1% in the 12 months through October. That's double the Fed's 2% target. There are expectations that with inflation numbers like those, the Fed may have to speed up plans to hike interest rates as a way of getting inflation under control. Inflation is also top of mind at the White House. Saddled by falling poll numbers linked to inflation, President Biden ordered the release of 50 million barrels of oil from the nation's strategic oil reserve. The move was made in an effort to drive gasoline prices lower, just as the holiday travel rush begins. In a YouGov poll, respondents said high gas prices were their biggest concern this holiday season. The national average to fill up at the pump is $3.39 a gallon, according to AAA. That's roughly $1.30 more than the same time last year.